Hey, what's up, everybody? Tim Albrecht here, and welcome to this week's episode of the Ask a YFP CFP segment of the Your Financial Pharmacist podcast, where we feature questions from you, the YFP community, to be answered by one of our very own fee-only certified financial planners. Please note this podcast is intended for educational purposes and should not be considered financial or investment advice, as we do not know all the variables to one's personal situation when answering a question. Before we jump into today's question, a shout out to our extraordinary YFP financial planning team that makes this segment possible. Your Financial Pharmacist offers fee-only comprehensive financial planning services that are customized to the pharmacy professional. So whether you want to pay off your student loans, make the right investment decisions, or simply build a solid financial plan, we'll help get your income working for you rather than the other way around. You can learn more by visiting yfpplanning.com. Again, that's yfpplanning.com. Okay, this week's question comes from a member of the YFP Facebook group. And the question is, has anyone ever tried investing in real estate investment trusts, also known as a REIT? Is it something one can consider investing their money in? Tim Baker, what are your thoughts?
Yeah, so these are actually pretty common, Tim. So just a recap, a REIT or a real estate investment trust is a company that essentially owns and operates, manages income generating real estate property. So this could be, that luxury apartment complex that's being built or that's been around for a while. It could be commercial property. They're very much like the mutual funds that you see in your 401k. And it's just this principle of pulling a bunch of money from numerous investors, basically where you buy shares of those properties and then you reap the benefit, just like a normal investment. Now, when we talk about real estate investing with a lot of our clients, we kind of show this spectrum of real estate. And I wish I could show the picture, but I'm looking at it. And basically, you have anything from, say, a REIT, which is very, very passive, to actually being landlord and financier of a property, a single family home or something of that sort. So that's very active management, active investing. So from the active versus passive, a lot of people say, well, investing in real estate is not very passive. This is. So just like, you're putting money into a 401k and you might tinker with it here and there, it's very, very passive. So the reason people do this and they put real estate in their portfolio, so to speak, is because of typically correlation. So this is the degree to which two investments move in relation to one another. Real estate has actually a fairly uncorrelated return stream with US stocks, but typically these more traditional types of real estate investing like REITs, I don't know if that necessarily holds true. So to answer the question, yes, this is very much a common thing that I see in portfolios. Our portfolios at YFP, we do have a little bit of real estate in there. So if you're in one of our models, we do use a US REIT that we like. Now, the other thing to be aware of is that where you have traded REITs, which is what we typically see. And I think this is what the question is. And then you have non-traded REITs. So traded REITs are basically, they're traded like stocks on the stock market. And this makes them very highly liquid, meaning, when you buy that single family home and you need to get that money out of the property, it's really hard to do so because you have to line up a buyer, there's transaction costs, there's inspections. For this, you can go on, make the trade, and the dollars are almost there immediately. So you have typically a willing buyer to your sale. That makes it very, very attractive. Now, the things that are different are the non-traded REITs. And I would see these more in the broker-dealer world, Tim. And these would come around, you'd have like a wholesaler that would come around with these portfolio properties. And basically they would ask the financial advisor to put a portion of the client's investments into a non-traded REIT, so not traded on the market. The reason that a lot of financial advisors like this is because they typically carried high commissions.
Yep.
It's just understanding, where the money is, what you're paying. Again, if it's in something like a 401k or your IRA or even your brokerage account, you're paying trading fees and expense ratio just like you would pay on, say, a mutual fund. The non-traded REIT, again, are kind of more of these private placement type of things. And it's typically for more of those, more experienced investors. So the REIT is very much a common thing that you see in portfolios. I think it's a good thing from a correlation perspective. If you want a little bit of real estate, I think it's a good place to start that's more passive versus active and can round out a portfolio, so to speak.
And Tim, when you say at YFP planning, we have a US REIT that we like. Tell me more about what you mean by that. Is it in terms of the types of things that are being invested? Is it the fees are low? Like what are those things that you're looking for as a director of planning when you're selecting what the REIT will be?
Yeah, so when I build out our portfolios and we're looking at, the asset allocation, when we have an investor that say is an 80-20 investor, so 80% in stocks or equities, 20% in bonds or fixed income, we essentially take that 80% and we slice it up amongst different asset classes. So that could be things like large cap, mid cap, small cap. It could be international, so things that are outside of the United States. It could be emerging markets, so like the next economies to hit. And then we actually leave a little bit there for real estate. And we use a real estate REIT, an ETF, an exchange traded fund, to basically fill that class category. So what we do is we look at the different ones that are out there, and based on track record, expense, performance, we say, okay, this is the REIT that we like, and we build that into our portfolio. So it's a way to give the investors, our clients, a little bit exposure to real estate that's not necessarily completely correlated with the rest of the, S&P 500, et cetera. So, and these are typically, a little bit more income producing type of investments that allow you to, again, just have some exposure to the real estate world.
Tim, I'm wondering too, as you're talking, you described the visual of passive to active, with REITs being on one end of the spectrum. Of course, you're talking about passive, and your comment was good. Often folks may talk about real estate globally as being passive, and we know that it can certainly be active. So here we are talking truly about a passive opportunity. In your conversation with clients, in the conversation our lead planners are having with clients, when real estate comes up, general ballpark, I mean, do you feel like people are all along that spectrum? Are you hearing from most pharmacists that they really want to be passive? They don't want to get their hands dirty on properties? Are people looking to take a little bit more risk, more upside? Tell me about what you're seeing of clients in real estate.
I think it's curiosity, to be completely honest, Tim. I think I don't really know what I don't know, which is kind of common for the rest of the financial plan in a lot of ways. But I really only had one client that I remember that was like, hey, like we went down the real estate rabbit hole before, we kind of got burned. We don't want to do that. But I'll still be on that spectrum. Like I'll still act as like the bank. So, if we have some money laying around, maybe look at hard money or something like that. Like they still see it as a viable way to potentially be instrumental in someone else's journey. But I think for the most part, there's a lot of appetite for real estate invested in some form or fashion. So again, like the beautiful thing about this is that with real estate, you could have anything from like a crowdsource solution, which feels very liquid, but often is not. So I've tested out one. I put $500 in and I'm like, okay, well, how do I get my money out? There's like no mechanism on the app or the website to really do that. It's very illiquid. and I know that, it could be, again, acting as the bank. It could be, a house hack or a single family home or a fix and flip, all the way up to commercial raw land. So it could be a syndicate deal. There's just a lot of different things. And I think for a lot of us, at least like growing up the way that I did, it's like, you don't do that, Tim. Like you don't do real estate because it's too risky, or it just kind of, just put money into your traditional investment portfolio, save as much as you can and call it a day. But I think you really are foregoing some of the benefits. Now, are there risks? Absolutely. There's risk with anything. But to me, I'm willing to explore that and see, okay, is this a potential fit for my investment behavior that has near-term and long-term benefits that, you might not necessarily see in a traditional portfolio.
Great stuff. And speaking of the spectrum of real estate investment opportunities, timing couldn't be better. Month of April 2021, YFP has a real estate podcast coming to you each and every Saturday. We're going to be launching a new episode co-hosted by Nate Hedrick. Name should sound familiar, the Real Estate RPH. David Bright, investor up in the Michigan area, also a pharmacist, pharmacy educator, bringing lots of education resources, examples, case studies to help our community, the YFP community, better understand real estate investing opportunities, and also to be able to connect with other pharmacists, real estate investors. So stay tuned. That's coming in the month of April. If you have a question that you would like to have featured on an upcoming episode of the Ask a YFP CFP segment of the Your Financial Pharmacist podcast, please make sure to reach out to us. You can go to yourfinancialpharmacist.com/ask YFP or shoot us an email at info@yourfinancialpharmacist.com. Have a great rest of your week.